Happy Friday, everybody. That sound means we are now live here on our YouTube channel. It's our daily halftime report where we go through the markets one step at a time, looking at the charts, the news, the information, corporate information, company earnings, commodities, anything that's grabbing our attention we think is important and relevant and interesting, and kind of break it all down, analyze it for you so you can better run your daily routine as a trader. Welcome back out there. If you are a veteran of our community, you know what to do right now. Hashtag Team Tackle right in the chat. And if you're brand new to the channel, we do this show each and every day. Whenever the markets are live, we go live around 12:30 p.m. Eastern. You know, we're usually 1 or 2 minutes right there, Frankie. Let's welcome everybody out here today. Frank, as always, on Fridays. Welcome back. How you doing, sir?
Doing well. Always excited to be here on a Friday. Always fun. Never lets me down. So pleasure to be hanging out with the team as always.
Ooh, pressure then. Hopefully I don't let you down here today. I think it'll be all right though. Greg, how you doing, sir? Welcome back.
Doing awesome here. Glad to be with the team as well. Don't get to hang out with the Frank Meister quite as often as I'd like. So yeah, it's good to be here.
And we've got Coach Cody as well here running screens, helping us with some technical analysis, and also going to break down the markets.
What's going on,
Cody,
guys?
how you doing today, sir?
I'm doing well. I had to put a hat on, that way I can actually share my video, because otherwise I have bedhead. What's going on, everyone?
What time is it in Hawaii, Cody?
It is 6:35 a.m.
Dude, did you guys get a bunch of earthquakes over the last couple of days?
Not that I've noticed.
I play video games with this guy from the Big Island. I've known him for a long time. I guess over on the Big Island, they had like 15 quakes just yesterday. So
wow, I didn't even know.
I
didn't feel anything here.
Living in the islands, living in paradise, you never really hear the complaints. But yeah, I was just curious about that, my friend. But no complaints about being early. You do live in paradise.
Yeah, we don't feel too sorry for you.
No, we don't.
Hey, the market's open at 3:30 a.m. So if you want to trade the open, you got to get up early.
Well, you know, there's an advantage to that. Somebody who micromanages their account, they can just sleep through the first hour of trading and then actually just see a regular market by the time midday hits, right, Frank?
Yep. I think that probably would be for lots of us would probably be a good approach.
Yeah, that first half hour can be a bit crazy. Guys, let's get down to the analysis here. Let's start with the S&P 500. And actually, Frank, I want to get your take on this. You know, as one of the technicians, I respect your eye quite a bit. What are you seeing in these markets here?
Well, I mean, obviously we had pretty steep selling yesterday, but I don't think, at least from a broad perspective, it's done anything to change the overall rate of the market. Now it might turn into that, right? But as of right now, even today, you know, you saw the S&P index, you know, bounce basically off of the 20 SMA. So there's still going to be that buy the dip mentality. We haven't broke any support really, right? You know, and so while it was maybe a little grouchier than we wanted it to be on the pullback, you know, maybe that probably is dependent on, you, but I think at this point in time, we look at this as a pullback opportunity from a broad perspective. If we start to see things change, things break a little bit, you know, try to take a run and put in a lower high, maybe kind of like we saw crude do, you know, earlier in the week, then maybe we can say there's a little cause for concern. But for me, at least, I think this is just kind of business as usual. I'm not reading too much into yesterday's, you know, increase in volatility, the pullback. I mean, we had went up for what, like 8 or 9 overall days in a row or something like that. And so a pullback wasn't an unreasonable thing. We knew eventually we'd get one, right? We didn't necessarily want one. We didn't necessarily want it yesterday. We didn't necessarily want it to be as fast as it was, but we knew eventually we would at least get a little bit of selling. You got to respect that. I think you got to be, if you're, you know, on the bullish side of the equation, I think you have to be encouraged by the buying off of today's lows. And that's, you know, it really is a broad based, you know, you saw it in the Dow, you saw it in the S&P, you saw it in the Nasdaq off the rut. So you really saw, you know, buyers, you know, coming in with that buy the dip mentality. Is it a little early? You could probably argue that, yeah, it is. But I think the idea behind it is what I'm really looking for. So I think this is going to present a pretty decent pullback opportunity for at least some things.
Greg, what about you? How are you reading the price action the whole week of trading here? Obviously on a Friday, we're coming in here, market's trying to settle it in just a little bit here, coming up off those overnight lows pretty well there, Greg. You know, how are you seeing price action today?
Yeah, it's I think you know, Frank made a good point there. We did have 9 days in a row where it was just creeping up. It does look to me like it's rounding over a little bit. I always try to pay really close attention to that, because as you can see, we did that about a month ago, and it led to a somewhat decent decline there. So I don't know that we're completely done here going down. As Frank said, there is the buy the dip mentality. You just have to watch your levels, right? You have to watch the 20 MA is a very important point. I'd like to see a little more strength right now out of the S&P before I get on board. I also think that that old resistance level that we had, 3-4 weeks ago, does it play a resistance level now here as well? Probably be looking at I think it's about the 39.50 level there. So I'd be watching that one there to make sure to see if it can get above that. If it can, then I think we get back to those new highs and the buy the dippers come in. The only one that's taking it on the chin today is the Dow. The Dow's getting beat up, pretty more than most anyway. But again, it's still hanging above that 9. So it's, we talked about this yesterday in the halftime report, and I still kind of stand by it. It's still a wait and see kind of a time period right now, as far as I'm concerned.
Cody, what about you? I want to get your thoughts on his market as well. How are you reading price action?
Kind of like what Frank was saying, just taking a break. When you have these long moves like this, I completely agree with Frank. Like 9 days in a row, it's like when we get any type of red candle, red bar, it's not a time to freak out or change our overall bias on the market. I mean, even that craziness that we saw not last week, but the past 2 weeks before that, this craziness here, and of course all the headlines and the perma bears come out and they're like, here it is, it's coming. It's like, well, I mean, the overall trend is still up. So as long as that overall trend is still up, and we get times where it might come down, it's like markets don't go up every day. They don't have to. So my thought here is, with this 2 days and now a doji on a Friday, I'm actually really happy to have this doji on a Friday, because if it closes with this as a doji, I guarantee we're going to have some nice setups going into the scouting reports this weekend. So I like what we're seeing here. The resistance right above that Greg described is spot on. That we really have to kind of get through that first. But I really like, to see a calmer Friday versus something crazy or wild, because then you don't know what's happening into the weekend. But a doji on a Friday actually makes me very happy. I'm thinking that after we get a little cooling down, even if we were to base for all week next week, I would love that.
Sure.
Mm-hmm. Yeah, I have no problem with that either. I mean, a sideways consolidation in mid-March, when we're in front of earnings season without a lot of catalyst out there. We've already passed stimulus. The Fed meeting's behind us. The market needs to kind of find a new theme here, Frank. It's obviously got the reopening theme. We've got the, Disneyland's opening its parks, AMC's opening movie theaters. People are getting vaccinated. I saw 115 million Americans are now vaccinated at this point. So you've got that theme behind investors' brains in the marketplace, which is why they've been driving cyclical type of stocks to the upside. We've had great patterns there, but you might need a little time to kind of churn through this recent volatility, especially with the Fed mixed messaging. I think a lot of people are wondering what's going on with inflation and interest rates. It's leaving just kind of a gray area in all of our brains. Like, okay, where do we go next? Right. And so a good churn technical setup is not the worst thing for market prices here, and for all of us traders either. Do you think, Frank?
No, not at all. It never really is, right? We just sometimes will complain about it because we don't necessarily want it, but it's healthy, right? I mean, it's normal. You see extremes, here and there, right? We're up for 2 weeks in a row, down tremendously in a very short window of time. The extreme is never fun, right? Is always a tougher read for, just most market participants. So hanging around, cooking a little bit, as Maddie likes to say, is always a good thing, right? Especially when we're talking about the broad market, because you're going to see, things happening within individual sectors and industries, right?
Mm-hmm.
So, I mean, the S&P can go sideways for a long time, and you can have some really good runs in different areas of the market without any problem at all.
Yeah, I agree with that as well. In fact, I do want to look at many of those different areas of the market. Let's start with all of the different indexes here, Cody, and give me a flash through the Dow, the Nasdaq, the Russell, and just quick technical read. What are you seeing from a relative strength, weakness perspective? Anything popping up, grabbing your attention?
So we already went through the S&P. The Dow, as Greg said, is taking a little bit more of a beating day, but it was the one that was running more than the rest of the markets last week. I mean, when we saw that when the Russell did this, it had more pullbacks than the rest of the market whenever it runs up really hot. So what we're seeing in the Dow right now is it took the lead last week, so it's going to be down a little bit more, but I don't see any real problems here on this chart. The Nasdaq, of course, has been the lagging sector over the past month. And that's just because, that rotation out of tech that we've seen, that we can expect that a tech heavy index is going to be, lagging until we start seeing some rotation back into tech. And then, of course, the Russell, your small caps are actually, I kind of like this chart the best out of all of them, just because this is kind of that breakout pullback. It did come below the actual breakout point, but I really like kind of what I'm seeing in the Russell, just because if this were to, break out again, using today's high and this resistance level at 2,300. I really like this chart moving forward. I think this is my favorite index out of all of them.
I would agree with that. Going into, right where we are right now, I would definitely agree with that, because you get the twofer, right, Cody? Like you pointed out, if you get that confirmation, you are also taking out that resistance. So if that's a concern to you, hey, maybe it is or maybe it isn't, but it's not a bad thing to have it behind you anyway, right? So I would agree with you, Cody. From a pure technical point of view, I think the RUT is definitely looking the strongest going into early next week.
Yeah. It's a little choppy, messy up there, though, isn't it, guys? I mean, it does look the strongest. I would agree with both of your sentiments there, but that red candle yesterday, bringing it back below the breakout channel, it's not exactly a textbook one. You're not taking a picture and slapping that into an article, but I do like it the most. And the RUT could easily make that comeback if energy and financials, which are so many of those like small regional banks and so many energy companies that are a part of this size of market capitalization, do make a comeback as well. So why don't we take a quick peek at some of these sectors? Because I do think that's where the action is going to be. And Frank, you and I and the coaches, Greg and Cody and Matt, we're all going to be ranking sectors here in a couple of hours, in terms of getting people prepared for next week's trading. So why don't we flash through a few of these? Let's look at the growth areas first, Cody. Start with XLY, like discretionaries.
You're going to go into the discretionary space first.
Yeah. Messy, so, just fair, messy, right?
Messy, Nasdaq-y, right? Because while we usually think tech for Nasdaq for definitely good reason, there's a lot of these in there too, right? Particularly Amazon.
Yep, that's right. Okay. So now take a look at the industrial material spaces. Go XLI. Still very beautiful, strong, and clean.
For sure.
Okay. Materials.
What'd you say now?
XLB.
Basic materials.
Beautiful trend, a little choppy up near the top, is still in a very good trend, right, Frank?
Yep, absolutely. And it's been kind of weird because you kind of broke out of the high base yesterday, kind of broke below the high base, the base of the past week or so. Today looks like we're going to close right back in the middle of that base, right? So we're going to have some wicks that might make it tough for this actual chart, but the sector as a whole, holding up, I think you have to like it.
Xle Energy, which has been one of our top rated sectors for several months now, actually. It's really been picking up steam. Deeper pullback, Frank, especially on the backs of the crude sell-off yesterday. We'll get to crude here in a minute, but it's not like it's out of characteristic. In fact, if I was looking at this pullback, and it really reminds me, obviously, of the last two pullbacks we had in December and January, which ended up creating opportunities once they kind of worked themselves out into beautiful trends. So what are you seeing here in energy? Because I think this is one that everybody's going to be focused on.
Right. Well, let's start with XLE itself. One thing that's kind of interesting to me, at least, is where we're trying to find our bottom here today. If we go back, and we have to go back a ways, Cody, we're going all the way back into 16, but that was a major support level for it. We saw just huge price action when we broke down below that last year. Obviously was a big deal. And while it's not necessarily a huge thing, I like that we're hanging around that history, right? We know that we've played off of this price point at approximately $50 before. So that's a positive. Obviously the trend's still very much intact. I don't love that we went below the 20, but I'm not going to stress it, at least just a little bit below the 20 SMA. We probably are going to need a little bit of movement. And this was pretty broad, right? Like I said, and it was kind of prompted by the selling over in crude. Probably for me, at least, need at least a little bit more upward confirmation before you get too terribly excited. It wouldn't be the most shocking thing in the history of the world if it were to pull back a little bit deeper. If the pullback was not quite done yet, that wouldn't be a tremendous surprise to me. So I think we need to watch this one day to day, because for me, at least, I am very interested in this pullback. I think we are at a place where it would start to make sense if we started to see the buyers step back in from a technical point of view. I also think there's a little more room to the downside before, it gets super tempting to maybe some folks that like the, deeper style of retracements. So I think this is going to be one that we want to watch pretty carefully next week, technically going basically day by day to see if we can get that confirmation or where we actually see that upward price movement. Makes sense that it would happen here, but it hasn't happened till it's happened, right?
Mm-hmm. I agree with that, but here's the thing. I'm going to ask you guys, every one of you, aren't you interested in this energy pullback? Frank,
100%.
I know you are. Yeah. Greg?
Yes.
Yeah, 100%. It's overdue as far as I'm concerned. You look at the run up that it had before it turned over here. That was pretty impressive. Longer than at least the last one, and possibly even as long as the one previous to that. So a nice, good stretch there. And now we're just getting some, pullback. We're going to talk about crude in a minute, but crude taking it as hard as it did. This actually didn't do that bad as far as I'm concerned. I'm in the Frank camp though. I'd want to be getting up above those moving averages before I get too aggressive here from a retracement trade perspective. But it's something you got to pay attention to, no question about it.
Well, just look at the top end of the sector here, Cody, real quick, and then I'll get your thoughts as well. But look at like ExxonMobil, Chevron, ConocoPhillips. You don't got to dig too deep here, guys, to find good retracements that fit those sector performance. I mean, Chevron, Exxon, CVX, you're on CVE, which is still a good pullback. You found a great energy stock there. Just throw a dart at the Wall Street Journal, right? I mean,
hey, you found a Canadian company. Good job, Cody.
Similar characteristics to recent sell-offs from a range perspective in the past, even on some of the big components. And there's even relative strength in some breakout momentum plays in energy as well, Frank. I'm interested in the sector. I don't think there's anything from the last week of price action that's going to shake me off of it. And if you just think about the trajectory, Coach Tyler talks about this all the time. Chevron had run from 85 to 115 in a month and in a week. It can take a week off.
Sure. Yeah, absolutely. And sometimes it's gotta, right? So like it or not.
Not allowed to take a week off. What are you doing?
Can't take even 1 week off. No, you can take a week off. No doubt about it. Keep flashing through the sectors here real quick here. Let's stay on the aggressive side of it. Communications, XLC.
Just another good bounce back day in communications. This has been a really strong space, and it's been some interesting names that have really led it, right? It's, when you think XLC as a general rule, at least me, I'm always thinking Facebook and Google. While Facebook's been strong this week for sure, this whole run up, not necessarily so much. We've seen a lot of the strength in the Discoveries and the Viacoms and the Lionsgates and the Foxes and the video games have really been struggling. So it's been a really interesting movement as a whole in this space. I think you do have to like it. Someone brought up Viacom in the chat a little earlier. I mean, it's been just insane. I mean, just
what's that ticker?
VIAC.
Oh, you look at these broadcasting companies, they've been on an absolute tear. Viacom, like you mentioned, Frank, that's parabolic. I mean, this momentum parabolic. It's crazy.
Yeah. Discovery, right? Discovery. I mean, I remember, the little pullback of a few weeks ago. I mean, I'd be lying through my teeth if I thought it was going to run like it did, though. So pretty nutty. Even DIS.
Cody's struggling.
I'm sorry, Cody. DISCA. I'm used to Tyler knowing every symbol. DISCA.
It's a 5 ticker.
That's right.
Oh, I'm with Matt. I don't like 5 tickers.
Well, you might want to start liking it. Look at the.
Might want to like that one. Comcast, another one. These are flying pretty high, and so I think anything that's got momentum, you're always interested if you're a trader.
Let's see if Cody can get there. Comcast.
Can you get Comcast? A little bit of a different chart.
Is that just Com? No.
It's a 5 ticker. I'll give you a hint.
Oh, just tell me the thing.
Take the letter O.
It is right there. Look, it's right there. I got it.
There you go. So a little different look. Overall, same theme though, right? With a ton of strength within the general space, if you will. So we've got kind of the momentum type of plays in the Viacoms and the Discoveries. We've got a little bit more pullback activity if that's more of a preference in Comcast. So definitely a nice looking place right now. Some places, right? The video games, not so much. You think about Activision, ATVI, and Take Two, and those things have really struggled and are kind of hanging at some support levels by a thread. So you are seeing a little bit of separation in some of the industries within this space. No huge surprise, especially with communications, right? But I think it's something that is another one of those areas that has very much been worth having on your radar, and I believe going forward, at least in the shorter term, it should remain on that radar.
I agree with that. And then a couple other sectors here, XLF, we got to talk about today. Some of the other ones are a little bit more stuck in a range and flat. We've looked at where the strength is. We'll still take a peek at the others, but XLF has been on a tear, this year. It's been part of that reopening theme, the cyclical trade back into energy. People are going to go out and spend, all that kind of stuff. Little hesitation up here at the high. It's choppy, red candle, red candle, red candle. It's a weird little candle pattern on the daily. But when you think about the context here, yes, there was some negative news around the sector today for certain banking names on Wall Street. The Federal Reserve hinted at this on Wednesday. They were going to pull their leverage requirements, around bonds and all that kind of stuff. So banks got to hold a little bit more money in reserves. So what? They'll get over that. The reality is, that rule was put in place for the pandemic. The pandemic's now over. It's been a year, right? So they're changing those restrictions. XLF took it on the chin here a little bit, but now here we are in that pocket, Frank, 9 EMA, 20 EMA, rising moving averages. There's a lot of opportunity in financials, in my opinion.
For sure. We did hit an all-time high on XLF yesterday, right? So, it is, the chart is the XLF chart. When I think about these ETFs, usually I use them more as a guide than the thing to trade. I'm not opposed to trading them, but I generally prefer to go look into, things in that area. This would definitely be one of those cases where the chart on XLF, it shows strength. I like it. If we see upward movement, I think that, translates very nicely into components within it. But it seems like this wouldn't be the chart I wanted to pick out of the bunch, I guess, if that makes any sense. But listen, you could, if you want to get, be mean to it, maybe you want a deeper pullback, that's okay. There's nothing wrong with wanting that. There's other opportunities, and maybe you get it, maybe you don't. But again, we hit an all-time high yesterday, so we're still above the 20. I'm not going to overthink this stuff, because usually I get into trouble when I overthink it.
Don't overthink it. No mind, Cody. No mind. That's right. Just be zen, my friend. Be zen. Flash through the last few sectors here. Then we're going to get into commodities. I really want to get Greg's take on those as well. But Greg, I want to get your take on some of these more defensive areas, especially dividend payers. Look at utilities real quick. Coming back up off a long-term range, these kind of companies do pay a dividend. Real estate, XLRE, the REITs. We'll flash through all four of them and get you. Go ahead.
Yeah, I wanted to talk with you guys, particularly Greg, on XLRE. We've seen some pretty good strength in there and pretty interesting pattern on the actual ETF. What are you seeing over on the REIT side of things, Greg?
I really honestly haven't been paying a lot of attention. I like the chart here. It pulled right back to basically the top of that red candle there. So from a technical perspective, I like the pullback here. It's been reasonably strong. I've seen, trying to think of a few of the real estate companies that are like BlackRock and things like that. They've been going pretty hard lately as well. So a fair bit of strength there. I think this is your garden variety pullback, and you're already seeing the confirmation today. I think you get another leg up towards that 40 mark there for sure.
It really kind of jumped out to me too. Cody, that's a Cody special, right?
Yeah, I like that.
I got one, just since, because we don't talk a lot of REITs, right? I got one I'll throw at you, Greg.
Okay.
AVB.
Ooh, I thought I had the one you were going to pick. I didn't.
Oh, there's a couple interesting
one.
ones in there,
Yeah.
But I'll go with AVB. Very much matching the sector, right? Very strong. Recently, just kind of cooking. Don't really have a lot. AVB's been as high as like $230, so they do have some old history. Is this a pullback, and is this a pullback that I can at least think about, Greg? Would you say?
Yeah, I just from a technical read here, I'm kind of looking at the dividend payments down there. Pretty decent there. Now I guess those would be distributions. I guess they call them, not necessarily dividends. Depends on how they structure it. Yeah, I like this. Again, I'm really not crazy that we got another red candle, but it is a hammer candle. I prefer to see a green one here, but yeah, like it's pulled right back to that level of support. I think that's 185 there. This is textbook, man, as far as I'm concerned. You got that. I think that's the 9 EMA you got on there. the first one there. It got below that, but it didn't even get to touch the 20 there before it's pushed back up. So as long as you close today, again, for the more conservative folks out there, I'd like to see a green candle tomorrow, and then I think this is a trade you can enter, and you could probably build yourself out a pretty nice risk reward out of this one as well. So.
I had no idea that on today's show we'd have a little REIT contest, developing here.
Now I'm curious what you got, Tim.
I have two actually. I love this breakout potential on SPG.
Okay. So you went with the breakout on the SPG.
Man.
Very nice, right? Just about 122 probably.
Mm-hmm.
Don't really have. What would these guys have? I always like to. These guys, Simon Property has, they were so beat up for so long, right? So they got a million things above them, but they don't really have a ton of significant resistance ahead of them till the 135 range, 140 range. It looks like. So, yeah, you could get me interested in that, Tim. I think I like that one better than mine. Go figure.
There's momentum in the REITs. Who would have thunk it? Not usually trading Canada. So look at these charts. I mean, Simon Properties doubled since November. That reopening theme is affecting real estate. It's being picked up. I think people got to start paying attention to it. And obviously this week, a lot of them are. Quick last couple look at the few other sectors here. Healthcare, I have zero interest in XLV. But
one thing I'll say on healthcare is a weird ETF, right? And it's right lately, the hotness in healthcare has been the plans, the UNHs, the Humanas, the Anthems. That's kind of, broadly speaking, that's where the strength has been. Those things are starting to get extended to the upside a little bit, which is always makes healthcare a weird read to me. Anybody, we used to talk about this a lot back when I did, the market recap a couple of years ago. People would always either hear me cheering on or complaining about healthcare plans because they do really, really impact that XLV.
Mm-hmm. I got a question from the chat I want to, address here. Bring up APA if we can. We're pretty much done with, the sectors. Staples are actually kicking up a little bit. If you guys want to,
yeah. Now let's just take a quick peek.
Look at Staples. Let's wrap it up.
Because then we can say we hit them all, right? I think that would be all of them, and they've been starting to, lately they've had a better run. You're starting to see some reversal characteristics on things in that space.
P.
XLP, yeah. Like Kellogg's, right? Had a double bottom on Kellogg's, broke out late last week. Hasn't really done a lot either way. You are seeing some things in there. The charts aren't great. I didn't have a single, candidate for next week in this space from my scanning. Just didn't love where they were for new trades as a whole. But you are seeing it perk up a little bit.
Mm-hmm. Yeah, it is perking up, and a lot of the names in this area, there are some that are perking up in better ways than others that I'm interested in for sure. There might be a couple staples on those reports this weekend. Quickly, let's go to APA real quick. Then we're going to go to commodities, and I like this question because it's a new trader, Arturo Antunes says, I bought APA at 22, hoping it would go to 25. One of my very first trades. Should I get out? Now, Arturo, you're going to have to make the decision on what you do. I'm not ever going to tell somebody what they have to do one way or the other. But here's the advice I'll give you. Then I'll get a technical read from the coaches. Number one, you've got to build trades and trading plans and a mindset around trading to where you're going to do this thousands and thousands and thousands of times. If any one decision ever starts to create a lot of emotion, anxiety, and I'm not saying it is for you, Arturo, you're just asking a question here, but that usually is a bad red flag about the impact of that. And I understand it, though. I'm empathize because I'm a veteran coach, Frank, a brand new trader making one of their first trades. There's a little bit more of that heart pumping, right? There's a little bit more of that anticipation. So let's give Arturo a good technical read here. What are you guys seeing here? Because he picked it up on the moving average, it looked like, without confirmation.
So that Arturo, would that have been on the 10th or the 11th of March? I'm guessing that's where you did it, or did you trade it on the breakout, which happened, I guess, more towards the 4th or 5th of March? Because that's important to know, right? At least when we're kind of thinking about the technicals. Because one thing that immediately jumps out to me on these guys, and I think it's important always to note that just because it's a a sell signal or a bearish signal, it doesn't mean it's bearish, right? And vice versa on the bull side of things. But one thing that really jumps out to me on this, and you saw in other energy charts, not just Apache, is the traders that came in off of that 9 back on March 10th into the 11th. I can completely see where their head was at. And quite honestly, I don't think it was a bad trade at all, especially on the 11th. But once we took out that support zone a few days later, now all of a sudden, that first line in the sand, that first level of defense, the first level of glue to hold the trade together, right, was that little doji hammery looking thing on the 9 EMA. And once that was taken out, you're very naturally that's going to be a sell signal, right? Again, doesn't mean it's a bearish signal, doesn't mean it has to do anything, but breaking support's not ever good if you're a bull, right? So that level breaks down, right? And so that would have been a very natural, a little bit below that place to have a stop loss, in my personal opinion. Then kind of the next level is going to be, the moving average, right? That zone, a 20-day simple moving average. Of course, these guys got caught up with the sell-off yesterday. So I think yesterday was much more about the broad stuff and not Apache. I could be wrong, but I'll take my chances on that side of things. Now we're working into a new support zone, right? We've that old breakout point going back into the middle of February. It's lining up with the 50-day moving average. So if you kind of think about it like this, Arturo, and this is advice I give to everybody when it comes to stop losses, is identify 3 levels that that could work. So for me, I would say level 1 would have been that, that candle, the 9 EMA and the March 10th low. Option 2 would have been the 20-day moving average. And option 3 is right just a little bit below where we are right now at that 50-day moving average. Those are the 3 levels that I see that would want to hold this trade up. If one breaks, then the other one is not unreasonable to get to. Right. And so which one I choose is going to a lot depend on my read, my risk. Right. I don't know. I didn't take that Apache trade, so I don't know what I would have done for sure. But by identifying these 3 levels, I can pick a place for my stop loss. Hey, this is where, I was wrong. Maybe just wrong place, wrong time. Not even my fault, right? My fault that crude sold off yesterday and I hit my stop loss. Of course not, right? But that's a really good approach, I think, to take to placing your stop losses. Give yourself 3 choices. Compare them against one another, right? See what your risk reward looks like, see how much one more level is going to cost you, because when one breaks, a lot of times it's going to get to that next one. And now we're at that next one, and this is where we don't want to be, right? In a trade where, I don't know, I mean, if I'm in this trade and I didn't hit my stop loss and wherever, if assuming I didn't choose this level, which, bounce off the 9, I probably wouldn't have personally, but again, I don't know that for sure because I didn't do this. Right now, I really don't want to make any decision, right? I'm afraid that I'm going to make the wrong one. So I don't want to close it. I don't want to stay. I kind of throw my hands up in the air and just kind of let the world happen to me, which not what we want to happen as traders, right? It's the worst feeling, I think, when you're down on the trade, you've seen support break, or, and if you're a bull, at least you've seen those support levels break, and you feel stuck, right? You feel stuck. And you don't want to put yourself in that spot. That's why it's so important to prep it ahead of time, because I don't know the answer any more than anybody else here does, right? If I knew that this was the bottom, this general price point seems appealing technically, the old breakout, the 50-day moving average, it seems like a tempting place, but that's kind of where that begins and ends. It doesn't mean I'm right. It doesn't mean it will turn into one. And I don't want to put myself in that spot. We always make our best decisions when we're not, it's not right on the line, right?
Yeah. And here's what I want every veteran to do, and I'll get Cody in here next. Type in the word step system in the chat. And the reason I bring this up, even on the option report over the weekend, there's very simple rules we use when we're trading over at Tackle Trading. And Coach Tyler and Greg, I think you did this on the stock report as well, talked a little bit about management, stop loss, target, entry point, and position size. You got to have all 4 components. Frank, what you're talking about absolutely happens, not just to new traders, but veteran traders alike, where you get into something, you had a plan, and for whatever reason, you didn't execute. And now it's like, oh, we're down 14 points in the second quarter. This game plan is not going according to what we drew up on the chalkboard over the week. Now, what do we do? And man, there's a lot of different answers to that. It depends on the risk tolerance, depends on where you're at. But at a minimum, build a new trading plan. at this point. If you ever find yourself stuck in a position like this, come up with a new trading plan and execute it. You got to have rules. And what I've found from most human beings, especially new traders in the market, is if you find yourself in the middle of a market day and you're just staring at the profit and loss on your screen, instead of thinking about detailed data, probability, technical analysis, instead of looking at the actual facts, you're just dealing with your emotions. You're putting yourself in a tough position. So I would try to remove the emotions as much as you can, try to build a plan based on fact.
Yep. And both of that is kind of what I was going to add into it is the question itself had two red flags that stood out to me right away. The first one was the word hope. And we don't really hope. That's an emotion. That's not a, based on a plan. And the other one that was, asking what should I do? And Frank went into all the stop losses, but that's really what it is that you shouldn't be figuring out what you're going to do after you've already gotten in the trade. You should know, and that's what Tim got into, the step system, where there's always an if this, then that. So we're not hoping for a target. We set our target, and it either hits it or doesn't. If it breaks down below a level, like Frank said, the different ways to set your stop losses, we get out. And it becomes a systematic way of trading versus just buying and hoping or gambling. So those are what stood out to me. And I was going to hit on the step system, which Tim did, and I was going to hit on, having that stop loss pre-prepared as Frank did. So just, take this as just a lesson of making sure that before the move happens, whether it's in your favor or against you, know the levels of if this happens, then I'm doing this beforehand. And then from there, it takes the emotion out naturally for you because you don't have to think, you don't have to react. You simply execute.
I'd like to add one thing, that all of that stuff that you guys just went through is sage advice. It's awesome. One of the things that I'm just an old school, simple guy. I trade levels. Okay. So Frank kind of went through, okay, this level was broken, that level was broken. You've now got a very important level here. I think it's right around the 18. You've got the 50 MA there. You've got that 18 level. You've got a round number. You've got all of these things adding up. And the one thing that we didn't talk about is if it breaks that level, you're now back into your trend is now changing from, an intermediate bullish type trend. Now you're going to end up back into it at a very minimum, a neutral trend, and possibly depending on how it gets to that level, you could even be starting to look a little bit leaning to the bearish side. So the only thing that I would add to all of that stuff, which is all exactly brilliant professional, the way you have to play this game. The only thing that I would add is when you start breaking significant levels, you start seeing trend changes. That's when you absolutely positively have to act, right? Whatever it is you choose to do, you can't sit there and try and ride out these trends, especially considering it's probably a swing trade that you were looking at if you're getting in at 22 and trying to get it to 25. So that's the only thing I would add to that is when you start breaking those key levels, it starts changing the trend. Understand what you're seeing and act accordingly to that.
Yeah, and frankly, there's been some negative news around oil and the sector, and all this has kind of brought this down. So, and that happens. One last thought I'll have here: you're going to have to take losses sometimes. It doesn't matter whether it's this one or another one or whatever it is. Every trader I've ever known has had plenty of winning trades and plenty of losing trades as well, Frank. And that's part of the game. That's part of the whole business. You got to figure that part of it out too. Moving on, let's go through commodities here, guys. Let's flash through them pretty quick. Let's start with the ones that don't require a lot of analysis. Give me the dollar, Cody.
I can go on about the dollar, even though you guys don't.
Let me give you 30 seconds to do your best going on about the dollar. How about that?
All right. What I do like about the dollar here is, even though we still have the overall downtrend, I like that it's starting to, show us a slight reversal type pattern, even though with all the different stuff with the Fed and the giant amount of debt we just added with the $1.9 trillion stimulus package, when you're seeing the rotation out of the Japanese yen and the Swiss franc, and you're seeing movement into the dollar, it gives me more conviction that the US dollar may not continue on this overall downtrend, and we might actually see some neutrality or even a reversal back up. So what I'm keeping my eye on now on the dollar is right around this 25 range on UUP. Because I can't use $DXY, is if we can get, when that 200 comes down and then that $25 level, if we can get up to that and get above that, then I would no longer even have a little bit of bearishness on the dollar in the short term. And that's really what I'm liking to see here is that, yes, it's been neutral for quite some time, but I'm starting to see it perk up where it wants to get out of that neutrality in the short term.
Pretty close to 30, close enough.
I was gonna say, somebody get the red light, turn on the red light.
Actually, good valuable analysis on the dollar of all things, which I've been completely bored with for a long time, but it is perking up a little bit. It's still a race to zero. I don't care.
Matthew in the chart, he didn't waste half a second. So true.
He did.
He took it and ran.
He did. Bitcoin, real quick, beautiful relative strength. We've been talking about it all week. Even after some volatility in the markets, it's up here pushing near an all-time high. I got nothing to add to that today. Gold is doing what it's doing. I know Coach Mark is actually liking this little pickup here recently. And Greg, you're a commodity guy. Are you interested in gold deep down here? Or are you still seeing the bearish technicals?
No, I like it here. I think it's due. It came down to a pretty significant level, below that 1700 there. It's just not. It's not there to go all into the upside of it yet, but it's showing signs of life that we haven't seen for a while. Right now, I think the level that we're at right now, I think that's around the 1750. It does have to get above that. Once it clears that, I think you're going to start to see a little bit of a turn here. You can also see the moving averages here, the 9. I think that's the 9 that you've got there. The 9's about to cross over the 20 if it hasn't already. That's giving it a little bit of bullish, wake up call there anyway. Long term, especially with the Fed, the way they were talking the other day, long term love gold. That's never been an issue there. You just added $1.9 trillion more to the debt, which is never good. So long term, love the gold. Short term, it's got some work to do. That's really all I can say with it. Again, I'm a big levels guy. So the 1750 level, if you're already into a position now, that might be a place where you could add to it. You do have a little bit of overhead resistance and you do have some specific levels as you go up 1800, 1850, et cetera, et cetera. You've got these moving averages to worry about. So it's not like it's going to be a clear sail up to the top there. But long term, I don't think you can deny that this thing, as long as we keep printing money, it's going to have its day in the sun for sure.
Mm-hmm. There's a couple things that I got to work through in my head that don't need required here in the show. But from that long-term perspective, just the Fed's recent comments about inflation ticking up and all that, what the bond markets are telling us here recently that they don't buy it and they don't believe it. I don't know. I mean, if the Fed raises interest rates, I don't think that necessarily is going to help gold, right? So I'm with you. I'm not going down this path too far. I'm just saying I have a few more questions right now that I did not have 6 months ago. And I'm with you on all the stimulus and the money flooding and all that. And I'm going to own gold, Greg, for the rest of my life. Some version of it, some portion of it for what it represents to me. But there's a couple things I got to work through with Matt. Let's move on to oil, though. I don't need to work through much here. It had a nasty day yesterday, the worst one in almost a year here.
I'm gonna pause you real quick. Thank you, Eli. We got a super chat. We don't get those too often. Thank you for that.
$19.
Yeah,
dude, that's
you.
like sandwich money here. I love it.
Tim's thinking lunch. Tim's thinking lunch. Thank you, Eli. Appreciate it very much.
Definitely gotta give shout outs to when we get those super chats.
Eli, very cool, my man. Appreciate it. No doubt about it. Let's take a look at crude oil. I think we got to spend some time here, though, and see how Greg, Canada's maybe most important resource. I'm not sure about that, but I know it's one of the commodities you guys export a lot.
Second most. Coach Greg is the first.
It used to be. Now I don't know what our resources are now, but big tough day yesterday. What I'm seeing right now is a big dead cat bounce here, which is really not that unexpected, being that we had a high volume down day yesterday. It did come right down to a support level there. Oil, we talked about this yesterday on the halftime report. A couple reports come out, a little bit of a surplus there. It just right now you just got to see what it's going to do. I'm kind of we looked at ExxonMobil and Chevron and all beautiful pullbacks. this is what's going to lead it as far as I'm concerned. So you gotta figure out is the downside of this over? Are we going to hold at 60? I think 60 is a very important level. Really from a technical perspective, that's really what I want to see, is hold above 60 and start working its way back up higher. Really nothing has changed from a trend as far as I'm concerned. We're right kind of at that same, you could make the case that we're maybe a little more neutral than we are bullish, but nothing has changed just yet. I think I think Frank's probably going to note this, that you had a pretty nice bounce yesterday afternoon off of that 50 MA there too, which is always a good thing to see from a bullish perspective too. So that's really my read right now. Yeah. Unless OPEC gets a little frisky, then we'll have to wait and see what happens.
I'll tell you who is getting frisky. It's Vladimir Putin right now, but we don't need to go there. There's quite a bit of friskiness going on with Russia right now. We'll see what he has to do with the oil markets. Frankie, I'm going to make a statement. You tell me if you agree or disagree with this. I am very interested in the pullback in energy stocks. I am not interested in the pullback in crude oil.
100% agree with that. Anybody who's been around me knows that I believe that when it comes to trading crude, you are purely momentum playing it from a trading point of view. When it gets on a run, it can cook, right? We've seen that as of late. As soon as it stops, it becomes crude again, right? Choppy, back and forth, not a lot of decision. So I would 100% agree with that. This has, I've been in the energy stocks versus the crude myself, this whole run, for better or worse. This chart just makes me feel that way even more. I think for the shorter term, at least until we see this, get digested and cook out a little bit. I'm sure day trades, I'm sure there'll be some great ones, right? But swing style trades, I think crude becomes pretty difficult to my eyes.
It's a nasty candle yesterday, Greg. When you see a pickup like that in volatility and volume and the size of that candle, that's going to give any trader on any product just a little bit of pause, don't you think?
100%. And then, we preached this yesterday when we closed the show, caution, right? As far as I'm concerned, the whole marketplace needs a little bit of caution right now.
I agree.
And that shows you right there. And I think you guys made a good point. As I was saying, when I was doing the technical read here, we looked at the XOMs, we look at the, the energy plays, even the Synovises, which Cody stumbled upon, right? All setting up very nicely for trades. You know what I mean? But you got to let oil do its thing, because these are tied, somewhat, reasonably to that to the price of oil as well. So pay attention to this, and maybe use those vehicles as a little as a proxy or whatever to actually trade the movement, because this can be choppy. That doesn't mean that those other things aren't going to be a smoother ride. So that's really how I'm looking at it right now. I love a good company. We talked about this yesterday, from a fundamental standpoint. We talked about a couple of stocks yesterday. A lot of those companies, fundamentally speaking, they're good dividend payers. They've got some strength behind them. They got some capital behind them. So they're going to have their own run out of it. It is going to be tied to the price of oil somewhat. But if you can get a smoother run out of a trade than trying to chop your way through the crude oil futures here, then that's probably the way to go.
I'm with you. All right, we're going to move on to stock talk right now, and I think Frank's got a couple of good chart setups for later in the show, right, Frank? Like you always do.
Yeah, I'll start combing through the old watches, see which ones are closest to action.
Looking forward to it. I got a couple of corporate items I want to go through and get your take on here, guys, as well. But one quick note while we're in the middle of the show, appreciate you guys out there. I don't do this as often as I used to. I want to do it right now, though. If you are watching the show right now, just type in the chat where you're watching from. I always love seeing, kind of the national and global audience that we have here. We got a lot of students from the US, obviously, a lot of students from Canada, but we have students all over the world as well. So really cool to have everybody out. Let us know where you're watching the show from. I'm in Salt Lake City, Utah right now, and getting ready after the halftime show to turn on some NCAA basketball. Frank, I don't know if you did you fill out a bracket this year?
No, I did not, and I probably won't be watching some NCAA basketball.
It's not your jam.
Not my jam. Not my jam.
Cody, you fill out a bracket?
No, I don't watch basketball.
Greg?
No, sir.
Show's over. What are we doing?
You're on an island.
A single person here fills out an NCAA bracket.
Hey, dude. Six Nations rugby is on and hockey's in full swing. You can have your basketball. And by the way, Mr. Naismith says you're welcome.
We appreciate Canada more than you know. The home of many great things, including Dr. James Naismith, who did invent basketball, and many of my favorite comedians up there, Greg, as well. So I love Canada. But
we got a few of those too. Yeah.
Coach Frank's right. The greatest resource is old money homes.
Sure.
Let's talk stocks here today, guys. Let's start with Amazon. Frankie, one sport I know you do love is the NFL football. Did you see this deal Amazon and many others made with the NFL?
Right. And so they get exclusive access to Thursday Night Football for, is it 11 years?
Yeah, an 11-year package. Now, the NFL actually struck a deal for their broadcasting rights with many of their old partners like CBS and Fox and all that kind of stuff, as well as a part of the overall announcement of this package. But Amazon was a part of it. It was a part of this whole announcement. Amazon is going to be broadcasting the Thursday night games for the next 11 years. They're paying about $1 billion a year, according to somebody who's close to it. They don't ever release the exact details out of the NFL, but pretty cool. I mean, first streaming service to get exclusive rights on something like this, adding to the overall movement in Amazon. Now, Amazon's not moving on the news because it's not that big a deal for Amazon stock. I just think it's cool, actually, and it's another reminder how important broadcasting is these days, and it's not always going to be on traditional networks. Frank, any reaction to this news?
I mean, I enjoy it. I enjoy me some good Thursday night football, and I want it to continue to be that. I love that we get Monday night football, Thursday night football, Sunday football. I'm all about some NFL football. So anything that cements that for another good chunk of my life, from a stock point of view, I mean, I don't know what it all means. It's Amazon, right? I mean, everything's kind of a drop in the bucket to Amazon, it seems.
I was just about to throw out there. I was like, Tim, you asked Frank what he thought about a stock news. Frank doesn't watch the news when it comes to stocks. He looks at charts.
Oh, I actually more interested in the news about the NFL.
I
don't think it means much to Amazon, to be fair.
That's exactly what he thinking. He started going into football. He's like, as far as the stock goes, like, I don't know.
I got a question for you guys. Have you guys ever seen the movie Demolition Man with Wesley Snipes?
I have.
Sylvester Stallone. All right. So if you guys remember that movie, at the end of whatever period of time that was that they were in, there were basically one company, I think, that took over everything, and it was Taco Bell.
Taco Bell.
So I'm so old, and that's why they call me Old Money Homes. And I remember when Amazon was a bookstore. Now apparently it runs the entire world. I don't think Taco Bell's going to win. I think it's going to be Amazon in 50 years from now. Everything will be Amazon based, and now they're buying football as well. So good for them. Good for them. That's what I say.
Absolutely. I'm with you 100% on that. The future will be fought by Disney, Amazon, and probably somebody like Google. Mark always talks about in the year 2033 or 2333, something like that. I'm with you, Greg. It's no longer Taco Bell, by the way. Taco Bell had its run. It's no longer going to be the dominant overlords of the future. No. Not stock relevant, because it doesn't really impact Amazon. It's $1 trillion company, only $1 billion deal, but I think it's interesting. And on the interesting note, Frank, you're an NFL fan. Monday Night Football now with ESPN and Disney. Give me the Disney angle on this. They can flex any game they want to into Monday night.
Ooh, nice.
So
you get to the second half of the season and it's not quite working out like they had thought it was going to. So you don't get stuck watching Bears games on Monday night. That's a good thing.
Whoa.
You don't want to have to watch Bears games this year. I'm going to tell you that. We're kind of punting on the year, it feels like. All right, moving past the NFL, back on some market stuff. Eli actually puts another question in the chat here, and I want to answer it right now. Could you guys talk about USOI? Give me USOI. Now, Greg, this might be up your alley here for dividend payments. Will you look these up? Or MDLX?
USOI is way down here.
$4 stock, yeah.
So it's an ETN is what it is. Exchange traded note.
Mondelez.
And then MDLX.
MDLX.
Okay.
Medley
Yep.
LLC. And explain why the yield is so high. See if you can find the dividend yield on that, Greg.
All right, give me a second here.
I don't trade either of these stocks, Frankie.
Yeah, I don't either. I think on the USOI, it is an ETN. It's a covered call ETN, which would be why the expectations probably are high. Is basically it looks like what they whatever their vehicles that they're trading, they're also writing covered calls against. So it's kind of like the 1-2 punch. I'm sure that's dividend paying companies or vehicles of some sort. So they're collecting the dividends and selling the covered calls. So it looks like on USOI, I've never ran into them before, but I can see what they are. I think that's probably the answer on them.
Medley LLC here. This is a huge dividend payer. It looks like, Greg, from a percentage perspective.
It's a series trust. Like
Okay.
it's not like your regular run of the mill stock, right? I'm just trying to find it's a 54% dividend. But yeah, that whenever I see something like that, it makes me believe that there's something more to it. Like the fact that it says 6.875% SRNT 2026. So it's some kind of, I'm not sure about the full arrangement of it, but it's not like a regular, like that's not a company as far as I understand. Again, I'm just having a hard time. Normally I have a spot to go to for this, but it's not giving me anything right now.
No.
Yeah,
This looks like some kind of investment trust almost.
That's what it is. It's some kind of arrangement like that.
Yeah,
some kind of derivative, something or other. And they just, all I can find on it so far is just their dividend announcements and stock decreases.
Right.
There's really not a lot to it, but here's something I learned about dividend payments. If they're too high, there's probably a really good reason for that.
Mm-hmm. Yeah,
so security could be a problem. You know what I mean?
Very simple and very bluntly to me. I'm with you, Greg. The very first thing I thought of was red flag, red flag, red flag, red flag. Yeah. There's something here that needs to be dug into, Eli. This is going to require a little bit more research for you outside this show. I guarantee that, because these aren't traditional type of companies that just trade with shares out there on the exchange and whatnot, paying an offered dividend based on their profits. They might be interesting investments. I don't know that one way or the other, but this looks like one you got to do a little bit more digging into over the weekend, Frank, I would say, right? Yeah. All right, let's move on. A couple of different earnings reports I want to get to. Nike is next, NKE. It's not earnings season, but we got two big names that reported yesterday.
Yeah.
So, sorry, Tim, if I can just interject for a second. Yeah. This is called a senior note.
On
so
MBLX?
It's some kind of, it's some kind of bond distribution or something like that. They call it a senior note. So that's what the SRNT stands for. Mm-hmm. So it's a senior note going out to 26. So I'm guessing this is a bond, probably some kind of bond arrangement for that Medley LLC.
I read something about convertible bonds as well. A lot of what I was within 30 seconds, I knew this is a project, not an instant take.
That's right. That's right.
This is not an instant take. This is a project. That's one you got to dig into, try to understand the corporate structure on, for sure.
Yeah.
I think we can leave it at that. All right, Nike earnings. Frankie, I'll make this one really simple. The company missed sales numbers based on what they said, just less traffic in their stores. Mm-hmm. Their online sales improved, just like you would expect. A lot of people are still shopping, stimulus checks, all that kind of stuff. In fact, online sales were up, I believe, 59% in the third quarter alone. So they had mixed numbers. Their EPS came in better than expected. But now here we are stuck in a range post earnings. What do you do with a chart like this? This is a big company too.
It's a big company. Nike's not generally a great, swing trading style stock. So I'm going to pull a page out of Mark's playbook, and I'm going to say if we work our way back down into that 130 support zone, look to see if we build some support and maybe start being interest there from a position point of view. You could maybe talk me into that. Obviously, there is a breakout potential down the road on Nike. Nike's just not. They're just such a better, in my opinion, position trader stock. The risk to reward is just really tough on the breakout on a swing trade. Now, maybe that changes, right? Maybe we can consolidate right up the top for 2 weeks with and take a $5 risk. But right now, we're in the middle of the range. I think you're either waiting for the break or you're waiting for the support bounce, because you're basically smack dab in the middle of those two numbers right now. So nothing to see on the chart today in my mind.
Y'all ever do like condors on when you start seeing this within charts?
Go to the trade tab. I'll tell you why.
Too much. Yep.
First of all, for me personally, individual company condors, they are a lot trickier. And the degree of difficulty for a neutral condor on individual companies is way beyond what it is like on the RUT or an index or something like that. And if you look at the trade tab real quick, Cody, you're now post earnings. So the volatility just got crushed, and Nike's only 28, 29% implied volatility. Technical pattern read, you're dead on, Cody. It's the perfect pattern for neutral, right? But I just don't, I guarantee if you built that condor out, you're not going to have enough cushion. It's going to be a difficult management. Yeah, it would be difficult management.
Mhm.
I'm actually kind of interested longer term, Frank, in maybe a month or so after this chart kind of finds itself one way or the other. Because I believe as we move forward, as Nike has solved the online sales stuff, they've had tremendous growth there in the last year. People are going to need a lot of new shoes as they get back to work and stop working from home and getting out there in the economy, and they got the stimulus checks. I can see a theme potentially develop around Nike down the road through this year, but that chart, the short term, just leaves me with nothing to work with.
Right. Yeah. When you're in the middle, I mean, your biases take over, right? You like Nike, so you want to buy it. Someone else doesn't like it, they want to sell it. Either side, whichever side you find yourself on, you're taking on a lot of risk, right? In the event that your side loses. So yeah, you got to let this guy cook a little bit. Nice range that it's developed. And that means sooner or later we'll test that support or that resistance. And that's where I think we can start being interested.
I'm with you. FedEx earnings next here, if we can. And we'll kind of flash through a couple of these. Actually, a pretty good report out of FedEx. They put EPS number in at 3.47, beat the 3.21 expectation. They beat on revenue by like $2 billion in revenue. And this is after, a couple of months here, guys, where we had severe weather throughout the country. A lot of shipments were delayed. We have, supply side problems within industries and all that kind of stuff. But even on consumption end, FedEx had to slow their shipping down there for several weeks, and yet they still came out and crushed it. I love the company long term. It's kind of been a no performer here since October after that trend failed, but now we're starting to kick back up here a little bit. Frankie, any interest in the chart?
Not today. Not today. Now, if we consolidate up here, little high base develops, if we do the Cody special and dip back to the breakout point, that 9 EMA could be something there as well. Not nearly pretty enough of a chart to want to trade the day after earnings to me. Definitely needs to behave it, breaking into all-time highs with a nice, green bar or something. We could maybe talk, but it's a good start, but I don't think it's an easy trade.
I don't think it's an easy trade today either, but I do like the developing pivot point and trend. Maybe a couple weeks down the road. That's so often after post earnings, by the way.
Right.
Unless you get like a beautiful momentum candle, you got to let these things cook.
Yeah, sometimes you do, but a lot of times, more times you get stuck in the cooker for a bit, right? Which is okay.
There's nothing wrong with it. All right, guys, there's a couple other corporate items. Visa, real quick one here, Cody. We'll just do a little rapid fire through this because I want to get to Frank's picks. Visa, actually, they are dropping precipitously. A lot of this on the intraday, by the way, just midday, because the Justice Department is looking into whether their business practices are not fair to their competition, saying that Visa has had unlawful market dominance for too long with their credit card and debit card transactions. It's obviously not going to be good news for any company when you get a headline like that. But do we really think the Justice Department is going to do anything to shake up Visa? It feels like a news-driven midday moment back into a range. It blows up the chart, though, Frank.
So
whatever you had. Go ahead, Cody.
You're doing too well. So let's look into you, see if you're doing anything wrong. Is that basically what they're dominating the market above all other credit card processors? And they're like, all right, you're too good.
You are kicking far too much butt. That's exactly right. You're doing way too well in this industry. No, but the Justice Department does probes like this all the time. Attorney generals do probes like this all the time. I always see these headlines in a very simple way. Bad for the short-term traders because it's going to throw the chart into a complete chaos here in the short term. But usually this gets digested over time because government action fails to end up delivering on a lot of these things. Frank, how many times do we see these crazy headlines?
Yeah.
That chart, what do you think?
Gross. And the news, probably not much, but let it digest.
Yeah.
I would say Visa, a leave alone for the short term, I would say. I
agree with that. One last one here, Ford. Out of all the upgrade downgrades that caught my attention today, the automaker, Coach Old Money Holmes, loves General Motors and Ford. I got to tell you, I already know that about him. Ford got an upgrade by Barclays. They gave it an overweight rating from a neutral rating. They love what they're doing in Europe. They like their margin expansion. They had a lot of great things to say, slapping a price target on there at $16, which is another 25% above where it is. These automakers have had lots of juice behind them in the last quarter, Frank, and I'm still very much interested in Ford here on this chart. It's not catching a huge move here today. Is there still trade set up there?
Absolutely, I would say. I think you can make a case that GM's stronger right now, but it might be easier to build a trade right now on Ford, because we had our Cody special on GM, right? We had that happen. We broke out Friday, dripped down on GM on Monday and Tuesday, and we've kind of seen some movement already. So risk to reward might be tough on GM. I do prefer that, but this Ford has been pretty strong too, right? The thing about Ford, the biggest thing about Ford, I would say, is both a good and a bad thing. Depends how you want to look at it. They've, got a long ways. They got a lot of stuff above them, right? They're Ford. We got pretty significant resistance in that $18 ballpark. We've got a bunch of little things between here and there. Beyond that, I mean, we've been as high as close to $40, $36 or something. So there are a lot of layers on top of Ford that we're not running into on GM, which, on the one hand, we were there before, we could get there again. On the other hand, every little thing can be a resistance zone. One thing you got to like about Ford, though, is we recently broke out here, right? If you turn it to a weekly chart, I think Ford becomes a lot more appealing.
How many years you want on that?
3's fine.
I was going to go up.
He's going to give you 15. He says, you want your 3, here's 15 for you.
There. So you can kind of see here on the weekly chart, we're trying to push through some resistance right now. $14 seems like the next place that we're going to have to maybe profit takers or something like that. So I think there are still opportunities in Ford personally, and GM too, for that matter. Just depends on whether or not you're building right now. Right, with your building right now or building 2 weeks from now can change pretty dramatically. But yeah, once Ford broke that $10 resistance level, it's been very, very solid. And I think this pullback is something that we can't look at.
Well, and I love the fact that Cody did end up giving us this long-term chart. People that look at a trend in the last year or so of Ford, they're like, man, it's gone crazy from 5 to 12. I mean, how could it continue upward, right? It took 7 years off.
Yeah, it just took some time off. We all forgot about it.
Yes. It went to Europe to find itself.
It sure did. Backpacking and hiking through Europe, and now it's an EV company, Greg, apparently. So it is what it is. Greg, the automakers, it doesn't matter whether you're going to buy a Ford or whatnot. Do you have any interest in these companies?
Swing trade, sure. Position trade, no. The landscape, as far as I'm concerned, it's just kind of a fundamental thing, but the landscape from what I see and what I've seen for the entire span of my life to this point, it's just not a business that does very well overall. So it's even though they pay dividends and all that kind of stuff, when things get bad, they struggle. And I don't think becoming an EV company is going to change all that. So position wise, I don't know that I'm holding it or, investing in it, but hey, if it sets up a nice swing trade in a technical pattern, I have no issue with it.
Greg, we were having fun. Why bring fundamental analysis into the discussion about Ford's backpacking trip through Europe? I get it.
Yeah, sorry about that.
For anybody who doesn't know, by the way, Greg lives in Canada, near a lot of these making plants there in Detroit, Ford, GM, all these different companies. Greg, you have history and a relationship with, right?
Yep.
And you don't like them, right?
You know what? It's not. I don't like GM, and I'm a Ford guy. I drive a Ford. I like Fords.
F-150.
F-150. You betcha. Okay. The reason I like Ford more than I like the other the Chryslers and the GMs of the world is the 2008. I think they were the one company that didn't take a bailout, if I remember correctly. That kind of showed me, what they've got some scruples and some principles in life and all that kind of stuff, because none of those companies, as far as I'm concerned, deserved a bailout or needed one, but that's my own personal opinion. So no, we got a lot of car plants actually where I live in southwestern Ontario here. We used to have a bunch of them, and like I said, Detroit's only the better part of 45 to 50 minutes from where I am. And of course that is Auto Nation. So yeah, it's lifeblood for this area that I live in. So big deal here.
I love an F-150 though, Greg. I'm with you.
They're a nice truck, man. They're a nice truck. They ride. They ride
Frankie, we're
crazy.
not starting the truck fight, but
The truck, yeah, yeah, we'll pivot off of that. I just like trucks with character. Like the older they are, the more beat up they are, the more I like them.
I do.
So,
I love that too, man. I don't need a brand new truck. Nothing wrong
I'll
with
take a
brand new truck.
58 Ford all done up. I'm okay with that too, right?
Dude, I'll take an 87 Ford with a rust.
Yep, that's what I'm talking about.
Dents in the panel.
Greg give me way too much credit.
I want the classics, you know.
All right, let's start moving into our last segment here, and can't delay it anymore. Frank, you've got some charts that you found for the team out there. Why don't you show us what you got?
All right. I found quite a few today, a little bit more than I maybe thought I was going to do. So trying to be picky here. Let's start with DKS, Cody, Dick's Sporting Goods, breaking out here, or at least knocking on the door here today. Found lots of pullbacks. So might as well start with one of the breakouts that we're potentially seeing here on Dick's Sporting Goods.
So
Interest, Tim?
80, or are you looking at this kind of zone with these wicks? Wicking or not?
It's the 1-2 punch. I think at this point in time, the wick beating the wick doesn't take any more money, right? That's
Okay.
what at 80-32, I believe it was. So it's very, very little. Might as well make sure we push through it. So it's kind of a 1-2 punch where we're kind of breaking out of this little short-term high base over the last week and that old wick. Whether that matters or not, who knows for sure. But I like that we're getting rid of it.
Mm-hmm. I got to tell you, I absolutely love the pattern. No doubt about it. I'm looking at that's an all-time high, right?
Correct.
For Dick's. Yeah, that's an all-time high. I'm looking across the industry, and specialty retail is kind of a niche little industry within the discretionary sector, but some of its competitors, it's kind of hard to find anything better than what Dick's is showing me right now. I mean, you got At Home Group, HOME, different type of company, obviously, but in that space, breaking into a new high. But I think you're catching Dick's a lot cleaner, and that one's had earnings in front of it as well. Bed Bath and Beyond, BBBY. See, so many of these retail names got swept up in the GameStop garbage, in January.
Right.
And so it broke their charts up, and there's nothing wrong with BBBY, but that's not what Dick's is showing. Dick's is, go back to DKS. What I love about this is I'm looking across the space. It's just a clean technical chart breaking into a new high off of a month-and-a-half long consolidation. So absolutely, I have interest. Yeah.
So yeah, I was pretty impressed with the way they have held up, because you're absolutely right. They've held up a little bit better than some of their friends.
Mm-hmm. Cool.
Anybody, Cody, Greg, you want to claim it before we move on?
No argument there. I love a breakout as much as the next guy. So
Cody was promised a pizza party. He doesn't want to add any commentary right now because then it delays lunch, right? We got the super chat earlier. We're gonna have pizzas. Of course. No, I'm just
all right. Fair enough, Cody. Right. Fair enough, Cody. All right. A little bit of a different look on GPS on the gap. Got a little bit of a flag developing here on these characters. I still remember you guys making fun of me when they got the partnership with Kanye.
I did.
It was Matt. Matt's not here to defend himself.
It's true. No, Kanye signing. Actually, if you think back, that was last July, and I think it was almost then, somewhere around that time in the summer, I believe.
Yeah.
Look at what this stock has done since then. Now it's not just Kanye, but it's got juice, Frank.
It's definitely been strong. Got a little flag developing off of that 9 EMA. Not really a ton of resistance until we get into the mid 34s, I would say, 34 to 35 range, probably kind of the target zone that I would have in mind. But just a little, play off the 9, right? I mean, if you think about the 9 plays, and I think this can kind of come back to what we were talking about a little bit earlier on Apache, you're basically, I don't want to use this term, but I'm going to. You're basically betting the 9 holds, right? Where we pulled back into the 9, whether it's a little snapback or a little flag that's developed. And so for me, I want to move in pretty quickly, and I want to move out pretty quickly. If that 9 fails, if that low of that candle that bounced off the 9 fails, that's just, I'll throw in the towel, right? Mm-hmm. And so it's, if I'm wrong, hopefully it's not going to cost me a lot. If I'm position sizing the right way, it won't. If I'm right, hey, there is quite a bit of upside. There's a ton of momentum, right? As Tim pointed out, both, kind of longer term or medium term, but certainly in the last little while, very, very strong momentum. So as a trader, I always always try my best to find momentum. So
Agreed.
I always try to do that. Cody, a little bit of a flag maybe on these guys. Think I could kind of play in and just without getting too nutty here, above today's high.
Yeah, I would take it above today's high. I'm not worried about that wick when it comes to a flag like this. Yeah, above today's high. For flags, I like to look at the intraday chart, just kind of see, is there any like intraday pattern, high base, or something that I can get into.
Right.
And looking at that, I do think that today's high is really the only entry point onto that flag. There, if we had something like a higher base, like even here, had you tried to get in earlier today, then I'd be okay with that one. But I think with this pattern that's got going towards the close of the day, I think your entry would be on Monday above today's high.
So let me ask you this, Cody, would you prefer that flag type of pattern on Gap, or maybe something like on Nordstrom's JWN that really took off, late last week, breaking into some, newer highs? I don't think they're the all-time highs, but we did take out an old level of resistance that kind of had a little bit of a snapback.
So flags versus pullbacks, I actually kind of like flags a little bit better. However, the flag that we were looking at on Gap, it had run really high up into that first. So it had more of a run before it did this flag. So, but if it was like a 2-day flag, I'd like it more than Nordstrom. But Nordstrom, the fact that it was 2 days, even though it was strong momentum, I kind of like this one a little bit better. But typically, I like flags better than pullbacks, because to me, it just shows that there's not as much profit-taking selling conviction and not quite a base, but still just a little profit-taking at the top. So I usually like flags more than pullbacks, but in particular, this one with the 2-day snap pullback versus the, what was it, like a 6-7 day run on GPS?
Yeah, something like that, probably 5 or 6.
I just think that ran a little bit hot for me. A part of me would be more cautious on this. I'd probably decrease my position size for that reason. But between the two, I take flags over pullbacks, but those charts, I'm taking the pullback over the flag.
Fair enough. Greg, would you?
I actually like that Nordstrom. I really like the way that's set up. It's come back to the, I guess it had a couple of candles over, I don't know, about 3-4 weeks ago there. It's come right back to there. So you've got that level, right across there. You got that level holding the 9. I think that's fantastic. You got a hammer candle today from a technical setup. That's my jam, man. I think that looks pretty awesome. I'd have to go Nordstrom's over the flag. Don't get me wrong, I'm a big flag pattern guy too. I like those as well. I just think this one sets up a little bit nicer myself.
Yeah, it's a tough call. Yeah, it's a tough call. I was debating them myself. I got to do it because it's not very often. FE, a little utility company. So
and REITs.
You're getting crazy today. This is what happens when Matt's not around. We can go crazy on utilities and REITs here. So First Energy here. What I really like about First Energy is that you can kind of see they really had gone sideways for quite some while after gapping down on what I believe was an earnings last summer. Basically gone sideways, finally broke out of that resistance level, starting to show some upward characteristics, right? And so today's hammer candle doesn't hurt by any means. There's a lot of work to do, right? Mostly I wanted to take an opportunity to talk about a utility company that at least was kind of interesting. So I won't, if anybody wants it, they can have it. If not, I'm going to move on. But you don't get too many utilities, right? We had AES about a month ago, so you take them when you can find them.
AES, Cody, AES. But going back on that other one though,
what was that one that
FE?
39-cent dividend times 4, Greg, that's $1.60 on a $35 stock. I'm guessing that's about a 5% dividend, and the technicals are in line here. Any interest, Greg? This is your wheelhouse.
Yeah, well, let me just do a little something here, and I'll tell you how much interest I have, because dividends are nice, but how reliable are they is my question. 4.5%, 2 years, 1998. Yeah, it's got a different personality. It's one of those energy plays, and this is typical for or not energy, utility plays, where their dividend isn't how do I say it? it's kind of all over the map of what they actually pay out. It's not steady, which is what I look for. I like the technical pattern here. I think you get a nice little move out of this here. Longer term, it's not bad. It's not my wheelhouse, but it's not bad. I think there's better out there from a dividend perspective, but overall, I could do this as a swing trade for sure.
Yeah.
Interesting. I appreciate always hearing old money. He didn't get to be old money on accident. So,
Right.
I always appreciate to get your take. All right, let's look at something more exciting. Let's look at Valvoline. We've been talking about trucks, right? VVV, Cody. So Valvoline here recently broke into all-time highs. That would have been I don't know, a couple weeks back, that little breakout that you saw there around $25 or so, had a nice little pop, but we've basically just drifted as that 9 has been creeping up along the way, putting together a little bit of a high base on Valvoline here. What do we think about a little high base breakout on Valvoline, Tim?
I see it. I would not fault somebody. It wouldn't be a trade I would take. I'll tell you why. I don't love the history of the wiki candles when it goes into these little ranges. If I was gonna trade this, Frank, I think I would do a T1 quick pop and just take it if I got it, because
I think that makes sense.
It's there. This is when I may not even go for T2. And I know it's trending and all that kind of stuff, but this might just be a quick hitter for me. But some of the choppiness of the candles just grabs my eyes, and maybe it just is my own bias. It's very possible that's what that is.
Yeah.
But I don't like that part of it. But I see the breakout up there for sure.
Yeah, I mean, I've never traded Valvoline myself, so when I saw the kind of the 1-2 punch of the recent break in the little high base developing here, it caught my attention. But I could see where you're coming from there. It's not the smoothest of characters, maybe a good little one for like an intraday trade, right?
Yeah, could be.
Intraday breakout trade. I got to do one more because I very rarely get a chance to do it. And what about WWE, World Wrestling Entertainment? Don't get too many times to bring up.
Are they making money again?
I think so. I mean, they've held up pretty well during the last year. They just recently moved their WWE network over to Peacock, to the NBC Universal streaming service. So maybe more eyes on the product. I don't know how that will all work out, but they did move that over there. Now, I was initially thinking, and maybe we still could, that this could be a scenario where we scaled in, early today off of those lows and kind of scale into, half the position going to that resistance at, just shy of $60. We'll call it $59. And then, moving into the second, part of the position on the breakout itself, because there is some room into that $64 range if we can break out. And in my opinion, with today's candle, it's going to be tough to get that scaling in plan to work. I just don't think that will make sense from a risk to reward perspective. So it probably would now fall more into a breakout for me. But on the positive side, that would mean it was just a nice little cup and handle if we got the breakout, right? Got the nice, and pretty easy one to see. I know that you're not a wrestling fan, Cody. One day I'll convince you otherwise. One day you'll be stuck with me in the same city when they come to town, and I'll drag you with me whether you like it or not. But in the meantime, could I sign you up for a breakout of, we'll call it $59? Won't be super precise here.
As you were going on, I went ahead and looked back at the weekly, looking to see where previous levels of support and resistance are. 60 stands out to me as a pretty significant one. So I don't think I could take a breakout, or 65 is a good target. I don't know if I'd take a 59. I think I'd want the 60 and try to target 5. But a quick break at
back on the weekly, Cody.
Back on the weekly.
The weekly makes me more interested.
Yeah, that's what I'm saying. I don't think I'd take a 59 breakout. I think I'd take a 60 breakout targeting 65. That's my take on it.
Okay,
those are interesting reversal characteristics over the last year, Frank. I mean, you look at
that. They've really tried to better. And listen, I've spent more money, going to events and things like that, buying some t-shirts. So I'm definitely in the hole when it comes to WWE. So I don't trade them much.
Can I ask you one question?
Did this chart just turn heel, or is that?
I was just going to ask.
Oh,
is this
you
a
went
heel
there.
turn?
You went there. It's a face turn. Come on. No one liked it. Everybody liked to say mean things about it. It had to do despicable things to a one-time friend. But now it's kind of starting to see the light. It came in and helped somebody out that it didn't have to. And so, yeah, it's a little bit of a slow pop and face turn here.
Yeah.
Hey, Frank, you said you're in the hole for WWE. Well, we were just looking at Valvoline, and I couldn't believe it. I got this mini bike that I bought, and I needed some oil for it. So I went and bought Valvoline oil the other day, and it cost me over $20 for one quart of Valvoline
Holy
oil.
cow.
So
Wow.
the stock price is only 27. So you know what I mean. I think I'm in the hole with the Valvoline there. So
Yeah.
I feel your pain about the WWE.
So it's good. It's misery loves company, right? Now, listen.
Yeah.
I happily spend that money. There's very few things I enjoy more than dragging my friends and brothers to a live wrestling show. If you haven't done it, I would encourage you to, at some point in your life, do it. It's a lot of fun.
Mhm.
Nice.
Everything's better live. I don't care what sport you're watching. It's more fun live.
Except
I think that's
chess.
fair.
Let me think about that.
Chess.
Except chess, yes.
Chess?
It still sucks live. Anyway.
How did chess get thrown under the bus here at the end of my enjoyable show? It's a Friday. I love chess. What is going on here?
I disagree. I
love chess too, playing it, but I can fall asleep watching it. So,
Fair enough.
Oh, you
anyway.
watching those guys, how fast they can think through the strategies. It's like, I can't play chess on a timer. Those guys can not only play on a timer, but they can even see so many steps ahead that someone will just yield the match when they know they've been beaten. It's just like, how do they even think that much? Chess is amazing.
Mm-hmm. By the way, one last thought on WWE. People who may not have traded this in the last year or so, as it's been doing this reversal, it's had juggernaut trends in the past, Frank. So,
Oh yeah,
I'm always going to have a little interest in the company that's picking up momentum like this for sure.
Yeah, they went on some pretty impressive runs both ways, really. So, but they did a few years back. I mean, they went nuts. I remember there was a little breakout of like $25 or something that just flew to 40, and I was thinking, wow, aren't I smart? And then 3 months later it was at 100, and I was like, aren't I a moron? So that's the game of trading, right? Sometimes you look like a moron, sometimes you look like a genius, but you're usually neither one of those things. You're somewhere in the middle.
But
usually, at least I am.
As long as you're in the middle and humble and making a good equity curve over time, taking losses when you need to, I think you're doing just fine. So that's a face turn, not a heel turn. The heel turn was when it went.
Yeah, the heel turn is when it breaks out. I dive into it and then it breaks down, hits my stop loss. Then that was the heel turn.
All right, guys, let's start wrapping the show up here. Always fun to have all of you guys on here. Greg, Frank, Cody, thanks for being here with me, talking markets here on a Friday as we're wrapping up the week. Let's go and let's just have a quick conversation. I see Coach Mark has now joined us, but Frankie, let's get your final thoughts first. The week has had some volatility here, from the Fed yesterday, the reaction the markets had, interest rates picking up. We saw crude oil sell off 7%, little reprieve day here going into the weekend. How are you approaching it? What are your thoughts for the team out there?
I'm just going to say it's business as usual, personally, until I have good reason to believe otherwise. I think, we continue to maintain that bullish posture. We continue to take good quality trade setups. Obviously, we always position size appropriately, right? We always, keep our accounts under control, but I'm not going to read too much into the news, whether or not I should or shouldn't. Everyone who knows me knows that, unless everybody, all of the other coaches are kind of screaming in my ear that you got to listen to this news, I try to just let this charts digest it and go with it. I found that works better for me personally. So as long as our charts hold up, and we're trading into, we are going to need to wait for some confirmation in some areas for sure. But again, that's business as usual, right? So for me, same message as always, right? Trade within your systems, trade smart, trade repeatable, right? Have those game plans into play. We're not too far away from earnings, so make sure you are starting to consider those, right? It's March 19th, right? It's only a couple of weeks until that fun time is back on our shoulders. I can't wait.
Oh, you can't wait.
My
Do not
favorite
believe.
time of the quarter.
That's right. Cody, quick take. Anything you got?
Quick take is for the new traders out there, guys. Seriously, stick with us. If the students haven't already said it enough in our community, they can say it better than we can of how much they learned starting as new traders. So if you're new and you just found us, welcome. Please, stick around. Promise you will not be disappointed. We have many different trade systems and trade plans that'll help you get there. So that way you don't feel like you're flying by the seat of your pants. As traders, we follow systems, and when we're systematic, we win.
Mm-hmm. Old money homes with a positive equity curve behind him. I love the image there today. Greg, final thoughts for the team.
I said it yesterday, and my thought hasn't changed today. Just with the market action we got, caution. You know what I mean, and let things come to you. I've said this to probably several hundred students in my lifetime. Let the market come to you. You don't have to chase it. Like chasing, I'm telling you, I've done it enough that every time I do it, it hurts, right? So don't bother doing that. Just let the setups come to you. We saw a bunch of charts today. Frank had a bunch of good setups today. There's a lot of good things that are out there. We put out those reports every week, stock option reports, and we have these good setups. You just got to let them come to you. Get your entries right. Get your stop losses in there. Get your plans made up, like our friend there who was in APA there. Make sure you have a plan. Stick to the plan, and just exercise a little caution right now. Like I said, I think the market's kind of in a little bit of a limbo state from what they want to do. Watch your levels closely and trade accordingly. And I think that's advice for every day of trading, but especially
sure.
today.
I love it. Marky, thank you for popping in here at the end of the show. I know you've got a report that you do here in about an hour, webinar for the team, commodities, other market thoughts as we end the week, the At the Closing Bell show. How you doing, sir? Any thoughts for the team, and kind of pitch your report as well?
Listen, it was actually a really good cash flow week at the end of the day. So, I mean, it really was. And so, especially, we're going to have some volatility. I think the mix of messages there was very appropriate in totality. I'll share my thoughts with pro members in an hour on commodities, and then on Sunday night on our prep class. So 1 hour, Mind of the Trader at the Closing Bell. And then Sunday night, of course, our prep class where we go over the whole big picture.
Fantastic. If you are not yet a pro member, very simple, guys. We got a community of traders. They help each other out all the time. Daily webinars, daily content. There's a playbook on site. If you're new, go through that playbook step at a time. We have courses in our 101 series, how to read charts, technical analysis, options, Forex, like Cody teaches in his report over the weekend. It's a 15-day trial. There's really nothing that you have at risk. Come and see what we're doing on the back end. The weekend's a great time to sign up so you can get those weekend reports. There's a link in the description of every one of our YouTube videos, or you can go directly to the website, tackletrading.com. You can find the pro membership link right there on site. And if you ever have any trouble at all, Coach Mark will help you. You can email him, team@tackletrading.com, and we are more than happy to get you guys set up. Have a wonderful week, guys. Get ready for next week. End the week strong. Keep your head on straight. Have a wonderful, safe, enjoyable weekend, and we'll be back on Monday with the halftime